rage on that beat, going crazy.
Welcome to my channel. In this video I want to talk about the most profitable indicator that you can actually use. I will cover everything about it, so stay until the end of this video to get the full information about it and to understand perfectly well how to use this indicator. The strategy that I will cover is a unique strategy with price actions, with this indicator MACD, and also with some trend lines and candlestick patterns. So it's about technical analysis, but I'm pretty sure that you're going to love it. So stay until the end of this video. Let's start it. Well, moving average convergence divergence, that is the MACD indicator, is an indicator developed by Gerald Appeal, which is designed to reveal changes in the direction and strength of the trend by combining signals from 3-time series of moving average curves, alright? After all, a top priority in trading is being able to find a trend, right? So because that is where the most money is made. With a MACD chart, you will usually see 3 numbers that are used for its settings. The first is the number of periods that I use to calculate the faster moving average. The second is the number of periods that I used in the slower moving average. And the third is the number of bars that I use to calculate the moving average of the difference between the faster and slower moving average, alright? The 12 represents the previous 12 bars of the faster moving average. The 26 represents the previous 26 bars of the slower moving average. And the 9 represents the previous 9 bars of the difference between the two moving averages. This is plotted by vertical lines called a histogram, the green lines in the chart above, as you can see here. The histogram simply plots the difference between the fast and slow moving average. It may sometimes give you an early sign that a crossover is about to happen. So if you look at our original chart, you can see that as the two moving averages separate, the histogram gets bigger, alright? So this is called a MACD divergence because the faster moving average is diverging or moving away from the slower moving average. As the moving averages get closer to each other, the histogram gets smaller. This is called convergence because the faster moving average is converging or getting closer to the slower moving average. That's why the name moving average convergence divergence. Hey, before you do something, I just wanted to tell you that I have a bonus for you. I will show you at the end of this video how to set up this indicator and how to use it correctly when you are doing your analysis. So stay until the end of this video. Alright, how to trade using MACD. So let's go into this topic that is incredibly interesting for me, and I actually love a lot this indicator. Well, because there are two moving averages with different speeds, the faster one will be quicker to react to price movement than the slower one, right? So when a new trend occurs, the fast line will react first and eventually cross the slower line. When this crossover occurs and the fast line starts to diverge or move away from the slower line, it often indicates that a new trend has formed. From the chart above, you can see that the fast line crossed under the slow line and correctly identify a new downtrend, alright? Notice that when the lines cross, the histogram temporarily disappears. This is because the difference between the lines at the time of the cross is 0. That's why there is any histogram. As the downtrend begins and the fast line diverges away from the slow line, the histogram gets bigger, which is a good indication of a strong trend. So, example, this bit of setup had many good signals, as you can see, like the shooting star, and after this candle, a bearish engulfing candle appeared, right? So the third signal was our crossover indicating that a new trend has begun. The only thing here with this indicator is to combine also with price action, technical analysis, the basis, you know, because if you combine the basis with an indicator that really works for you and that you get the point of this indicator, you actually are going to potentially gain more pips or more entries, you know, and meaning that you are going to make more money. So just always use everything that you learn with price action. Alright, candlestick patterns, trend lines, and every single thing, you know. So by now you have the right information in your hands. What comes now is to put into action. So let's take a look at some examples. Here you have this example. As you can see, there was a huge drop. This push down was 104 pips gain. So after this big movement, the price created a pin bar bullish pattern, as you can see here in this part. So the next candle was a piercing line, and after 9 candles, our indicators show the crossover and the histogram changed, meaning that the downtrend ending. So after that, the price pushed up and reached almost 93 pips. Our entry was after the third signals. After the pin bar, see the example. So it's pretty simple, just combine things, price action, candlestick patterns with indicators, with this MACD. So let's go to the second one. Okay, here we have another example. It is almost the same thing. There were 3 signals or shooting star, piercing multi-candle, and the indicator, so showing us the crossover. Alright, so our entry was set after the crossover. The price made a pullback, and after that pushed down. It moved almost 100 pips. That was pretty nice. As you can see, it is easy to find when it's going to start a new trend formation. But what you need to keep in mind is the risk reward that you use, because sometimes this indicator also makes mistakes. It happens when there is a sideways condition or sideways trend. So let's see this example. After a huge movement to the downside, the market started to be in consolidation, and the indicators start to show fake signals, as you can see here, like this one, alright, and like this one too. The price touched the support and resistance and then went down, but with less momentum, making a sideways trend. Here we have this possible entry. If you were entered in this trade, you may run out of patience. The second fake signal was a good way of entry for those that are called aggressively traders. This is the second signal, fake signal, alright? Here we have a nice pattern, the bullish engulfing pattern after touching our support, and then a huge bullish candle, alright? So that makes us think that the market is recovering the momentum, but as you can see, the market stayed being in a sideways trend. So it was a fake news, a fake signal, alright? That's why you have to be cautious when you enter a trade. Be confident and do your analysis with the basis of trend lines, support, resistance, candlestick patterns, and whatever. So, and always learn from your bad trades. Those are important because this is going to give you the success that you want. It's important to be successful in trading, alright? So now I will show you how to set up this indicator, and I will show you how to use it correctly. So let's go to our platform. Alright, so here we are on chart or platform. The first thing that you have to do is to integrate this indicator to your chart. So we are going to go to this section, indicators, click on, and we are going to find this indicator. Just MACD. Here we have MACD. I actually want to put it in active favorites. So just we click it, and the indicator is going to appear the downside. I didn't click it because I have it already installed. So here we have our indicator. So the thing is, here we are. As you can see clearly here we are the numbers of this win average, and with the histogram 12, 26, and 9. It's close, always is close, just leave it like it's set up. So here we have our MACD. We can actually make it more bigger or more small. Alright, so first thing first, here we are on USDJPY. in this pair, the thing that we are going to do is to find support and resistance, alright? This strategy, the things that we are going to combine is just, the first step is to find the conditions of the market, if it's uptrend, downtrend, wherever, or after that just going to find support, resistance, trend lines, and after that use candlestick partners with a combination of this indicator MACD, alright? So to good signals for buy or sell. So let's go, we are going to 4 hour, find the conditions of the market. So go real quick, here we have this, this, alright. Currently we can say that our market is in consolidation zone. As you can see, the price touches our support, as you can see here, our price is actually currently in consolidation zone, because here touch our support, then goes back, almost touch our resistance, come back, and again come take our touch our support, resistance, and again. So this is basically in 4 hour consolidation zone. So let's go to 1 hour. No. So let's go to 1 hour. Let's find. Here we are. We are in a rectangular consolidation, a rectangular pattern. In this zone, in this zone, those are our support and resistance, alright? So we're going to find a good entry here. Let's find if there's any kind of trend line. So it's broken. Here we have another support. This zone. 1, 2, 3, 4, 5 touches. This maybe if this candle close below the support, the price is going to still going down and touches this basically blue line that is our huge support. And if it doesn't, the price is going to going up to touch this resistance. So let's find, here we have another resistance area. Let's look this shadow. 1 hour. Well, the thing here in this strategy with the MACD is just to find out the right movement at the right time and the crossovers, alright? So here, as you can see, was a crossover. The histogram was in 0, and after that it started to be in red, alright? Meaning that the price is going down, but it was a fake signal, as you can see clearly here. If you were entered here, maybe you could gain like 80 pips in scalping, but if you were lost 20 pips, so it was a fake signal. So always you have to wait until C and another divergence, convergence, alright? So here we have this beautiful divergence with the both moving averages. The thing here is basically so easy, because just to find the right time. It was a crossover fake. It was the second crossover with a better candlestick pattern. It was a shooting star, and after that a Pyrrhus engulfing candle involved all of these candles, and then the price started to going down, and as you can see clearly here, the volume is bigger. So this is a clear signal that the market is going to go down, touch this support 90, let's say 50 pips, maybe in one day or less. So yeah, it's going to close below this support and going down. So let's go to 50 minutes to see what is happening. Yeah, you can see here a dodging, after that engulfing candle. Yeah, this is going to end close below. So I'm going to sum up everything. So let's go to use this MACD in another situation like here. Alright, let's go, let's see. Here we have another good signal. This was a shooting star, bearish engulfing candle. It doesn't happen anything in our MACD and histogram, anything, just was like a zero almost, meaning that the price is going to be like consolidation on, or meaning that you don't have to put any entry in this occasion. So the price, just what happened after that, is still going down, sorry, still going up, wolfing, up, boom, llegó. Here we have in a higher price. So here was like, after that it has a bearish engulfing candle, and as you can see clearly here, the crossover was correctly, it was a fake out here, break, retest, but what happened? Fake out, and the price just go down. So here we have our signal. It was a pretty easy signal. So let's go to find this. It was a fake out, bearish engulfing candle, closed above or support or resistance, whatever, and then the price just still going down. And this was our first entry signal. Our second entry signal with confirmation was our crossover, and the third signal was the histogram. Alright, the histogram volume just started to increase very quickly. So here was, if you were entered after the second signal and after the red bearish signal candle, you probably make 34.25 pips. So this is pretty nice. And here we are. This was a fake signal. The price crossed the moving averages, crosses. So maybe if you were entered here, this wasn't a good signal, but you probably could enter and just start like run out of patience, because as you can see here, it was like what, consolidation zone, boom boom boom. After that the price just break this support and resistance, decided to go down, break, retest, and just still going down until touch our next support. So I'm going to go to 1 day to see something good like here. Okay, here we have another good signal. As you can see here, we are currently in our time frame of 4 hours. Here, or okay, hold on. Alright, it's almost everything set up. Alright, as you can see clearly here, the market was in a consolidation zone, right? Touch, and after that, just the price decided to what? To going up. In the histogram, on our MACD indicator, you can see that just were only fake signals, because when the market is in consolidation, you don't have to take any of these fake signals because you are going to lose money. So that's not a thing. You have to wait until see a good signal where the convergence and the divergence appears. All right. So here we are, consolidation, just break this resistance, and the price started to go up with this incredible bullish engulfing candle. And you can see clearly here the price and the MACD indicator started to increase in any histogram, in any moving average. The two moving average just started to separate, as you can see here, and the price just go up. So maybe if you didn't enter here, you could probably enter in the pullback, on the retracement. So the price just go up, go up, go up, and after that touches our support, our resistance. Almost this candle, it was closed below this resistance, and after that a bearish engulfing candle just appeared. So that was our first signal. Second signal, our resistance, and our third signal was this crossover, alright, in our MACD indicator, and the change of the histogram. Here was our first signal and second signal with this candlestick pattern and the resistance. The third signal was after the crossover, that is right here in this another red candle. So if you were entered at the end of this close of this candle, let's say here where the price and the moving averages are so separate, and also the histogram is bigger, you could probably make, let's see if the take profit is just our last resistance or last support, sorry, we have made almost 130 pips in 16 hours, so that's nice. It's pretty easy. So the point here is always remember and keep in mind to combine the things. Price action, or first confirmation has to be the candlestick patterns with the support and resistance, alright? The second, another candlestick pattern that confirms our last resistance. So you have to keep in mind these three things. It's pretty easy. Just support, resistance, candlestick patterns, and our MACD. Alright. So just wait until a crossover appears, and you have to see a good candlestick pattern close to our support or resistance. And after that, just open a position and we'll risk reward. So that's pretty simple. Just only have to wait the crossover or candlestick pattern and close from support and resistance. It's the only thing that you have to do. Basically, if the price is in consolidation zone, please don't enter any trade. Just where it is close to a support and resistance, and our MACD indicator and our moving averages are so bigger, and our histogram is higher, alright, with a lot of volume. So it's pretty easy, it's pretty simple. I think we are done by now. Alright, so yeah, so that's it for this video. Let's go. I do this. Alright, so this is pretty simple. Alright, that's pretty much for the video. Thank you so much for watching. I hope that this video was able to give you the right information about the topic. If you enjoyed this video, please don't forget to give me a like, leave a comment below, and subscribe to my channel if you haven't already. Thank you so much for all the support, everyone. I hope you are all doing well, and I'll see you the next time.